Welcome back to another episode of Crypto and Things. I'm your host, Scott Cunningham, aka Scott C Business, and today we're going to be talking about my next dividend report where I don't even know if I'm going to keep calling them dividend reports because now I'm also talking about my growth stock investments. I'm talking about crypto investments, real estate, so many different things. So I may change what the actual name is. I might just make it something like amateur investing or something like that. We'll see. But regardless, let's jump right in because 2 months have gone by since I did the last one and a lot has happened. A lot has changed. And I want to kind of give you just a deep dive into all the different things that I've changed and why I've actually decided to go into growth investments when previously I've been very adamant into just going with dividends, focusing on compounding interest, playing that long-term, much less risky game. But I'll explain exactly why. So before we do that, we'll take a look at all the changes that I've made to my dividend portfolio, and I've made a drastic amount of changes. So much so that I would really call this an entire portfolio rebalance. Essentially what I did is I wanted to zero in on a few sectors. Before, I was very focused on just being fully diversified to a fault. And what I mean is that I was investing in every single sector because I wanted to just be exposed to every sector. But then I wasn't really able to keep up with all the news, all the different things going on with these various stocks. And it was too diluted and I wasn't able to dedicate enough time. I still probably have more stocks than I should, but I've really consolidated down to what I felt was the safest, focusing much more on banking, insurance, real estate, really strong consumer goods, utilities, and having a lot more in investing, like in general ETFs, investing in many, many different things. I'm going to probably get some index funds as well. I also have a little bit more in food and grocery because that's performed really well in this time. Ironically, it is some of my biggest losers right now, but I'm very confident in these sectors. I pulled everything out of oil. I moved everything around. I sold a lot of my energy stuff. I just wanted to focus more on very, very safe sectors. Like I said, insurance, banking, and a lot in real estate. So all of my kind of more speculative stuff, I've kind of dropped off and reallocated. I took a lot of what I had previously as well, like maybe like $3,000-$4,000, and I invested all that into Tesla. So we'll get into my growth stocks momentarily, but you can see all these different things that I sold. I also sold out all of my commercial real estate because I don't feel confident in these like malls and different places where people are physically going to. I'm much more confident in residential real estate, even though there's a lot of evictions, there's a lot of things going on. These are I'm the most confident in these because eventually everyone's still gonna have somewhere to live. They've got to pay for it. Whereas businesses can close down, go bankrupt, get bought out, all this different stuff. So I just feel a lot more confident in residential real estate, and I just don't want to bother with commercial real estate anymore. That may not be the best decision, for everyone, but that's what I'm doing with my real estate investments. And I'm mostly invested in Canada. And you can see again here, I sold out all of my oil at a loss. So probably not the greatest move, but I can obviously claim that in my taxes and get a deduction. So it's not a big deal. And I mean, I'm up overall $1,592. This is the actual amount that I'm up, but that doesn't include all the trading costs, which is factored in here. So then this is the actual amount that I'm up, which is still almost 9%. And given I've only really been trading for a little over a year now, 9% is an amazing amount of gains. And that also doesn't include all of the dividend earnings as well. So that's a lot more. That's probably almost double because Well, not double. My annual average of dividends in total ends up being $1,325. So, that's pretty good. And then you add on the extra income. So it's like almost $1,500 for the year. So that is very, very close to double this. And that's amazing. When you include dividends, they make such a huge impact to your portfolio, compounding interest and everything included. I do want to get away from all these ridiculous trading costs though, because that's like 1/3 of my dividends for the year goes to trading costs. And that's because trading through your bank most times is very, very expensive compared to other things. Mind you, there's no free lunch, but yeah, I definitely want to focus more on trading on Wealthsimple and Questrade for significantly cheaper trading fees. I wanted to get my portfolio at least in my bank portfolio to a very good solid amount before I wanted to really branch off to other platforms. But the good thing here will be that I will have multiple places where my wealth exists. And if there ever was an issue with one of them, at least I would still have the others and there wouldn't be like a single point of failure. And I think that is very, very important for people to consider. Now, the reason that I've decided to invest in growth stocks, well, there's a couple reasons, right? I'm very, very young, so the risk reward is very high. I'm able to take more risks at this age, and I've made way more money already investing in, well, not more money, but I've made a lot of money investing in growth stocks for only like 1 or 2 months than I have in a while, right? $931. And I made this trade just last month, which is wild. $931 is over half of my profits from my appreciation or my dividends, whichever you want to pick, but that's over the whole year. This was just in a couple of months. AMD, I very strongly believe that they're going to just be dominating the computer market because they've got better benchmarks, they're cheaper, and more importantly, they have GPUs and CPUs, and they're taking on all the biggest competitors in the market and succeeding because both their CPU and GPU is in the new Xbox and the new PlayStation. So they're clearly like dominating the market from a cost perspective and from a performance perspective. And I see them, they have a lot more growth to be had with AMD. So I've only got AMD and Tesla really, and then a little bit of my excess funds that couldn't be invested because of the prices being too high of these. I just threw it into some physical gold and silver stocks, which ironically have declined $1, which isn't really that big of a deal. It was kind of just, I didn't want to just keep it in cash. I wanted to do something with it. Eventually, once I put in more money, I'll probably just sell this and take everything and put it all into AMD. And then maybe I'll find like a really cheap growth stock to invest in with my excess funds instead of putting it back into gold and silver, because I'm just not super confident in gold and silver right now. However, with the US money supply and the Canadian money supply being rising the most it has ever done in history in the last year, I see gold probably being a lot more valuable very, very soon. While I think stocks are a very, very great way to invest, I also think they will be the first thing to sell when the economic collapse does hit. So I am somewhat hesitant going forward. I'm going to be investing less into stocks, a little more into crypto, and then saving more money on the side to then buy back in. Now, with inflation and everything, it's not this best move to be holding much cash because it's just being devalued at such a fast rate. But if the stock market does collapse in the next year, then I should be able to make a ton of money in the same way I did with the original collapse from COVID. But this might actually be a bigger collapse based on inflation and everything that we've been seeing in the last little while. I've talked about this in a recent video. You could check that out. It's why you're losing money and how to stop it. And Yeah, so the reason that I'm also so confident in Tesla, because it is very speculative, but on December 21st, Tesla will be added to almost every major index fund in the world, which will end up being a massive cost based on the price, which is $609.99 US currently, which should get it somewhere between 70 to 80 billion dollars being invested on December 21st. And if you look at the market cap, that's an increase of about 10 to 15%, depending on how much it goes in. So we should see the stock go up about that amount. However, anything can happen in the next 2 weeks before that actually occurs. Well, actually, it's more like 11 days, or rather 9 days. So almost just a tiny bit over a week. So it's actually very, very soon. I'm going to hold, I'm going to wait, see what happens. I'm very, very confident though that the price will go up unless something crazy happens where institutional investors come in to bring the price down on purpose so that it's easier to acquire more Tesla stock for a cheaper price when the index fund ad actually happens. I'm not sure if that'll actually play out, but either way, I bought it at such a low average, $516. I don't see it dropping that much. And I'll probably be in the green no matter what. But I'm not confident that this will continue. And like I said, I think stocks are going to really basically tank next year, if not maybe 2 years. So I'm going to be selling out of Tesla, pretty much all my growth stuff. I'm not sure. I'm debating whether or not I should keep AMD because even in an economic turmoil, I see them continuing to grow and bouncing back very easily. But it might make sense to sell these as well. I'm not sure yet. I'd love to get your opinion on that, though. Let me know. Would you keep AMD and Tesla if there was an economic crash coming, or would you sell out, get your profits, lock them in, and then maybe buy back in? I do expect there to be a massive, massive crash in the next year, and I am saving based on that. So I will still be investing a lot into crypto because I think that's going to be the most defensive asset to hold in the next crash, and it's going to benefit exponentially from it, as well as with the halving and everything going on. It should be bullish for the next year or so. So I think there's a lot in the works there. Now, when we take a look at Realty, I did acquire a new property. I'm not sure if this was, I believe this might have been in October, but either way, this is a new property. It's in New York, so that's actually a new state. And the previous ones that I bought were in Ohio, and then I've got Florida and Detroit. So it is nice to kind of really start diversifying outside of just Detroit, which is what they were mainly originally doing. And just kind of having some properties across the US that are bringing in money all the time. And these are the payments over the last little bit. I'm not tracking individually anymore just because it's kind of a hassle, and they just pay me in bulk for everything. Obviously, it's not really feasible for them to send individual payments for each. So I just get bulk payments, and I'm fine with that. I'm fine to just report everything. A lot of these pay very, very similar. Some pay a little bit better than others, but I digress. Ones that are paying less cost less, and I bought more anyways, so they end up all paying very, very similarly. Either way, though, I made $11.50 Canadian last month from these payouts, and it just goes directly into my crypto wallet, my MetaMask wallet, where I hold these. Very, very simple, very easy process, and I'm excited about it. I think I will probably end up buying more properties as time goes on, but I don't want to get to a point where I have so much money invested in this because I even though I like it, I trust it, I think it's great, I still don't have, so much confidence in them that, something could happen, and who knows what could happen in the future, right? The only things that are truly the safest are things that you hold in your wallet that no one else has any control over or influence over. While I do hold these tokens, if something were to happen, if the house was to be sold or demolished, I have no idea what will happen. But yeah, that definitely does affect it. Something cool that they've done recently is they reevaluated their token for one of their first properties that was improved. So eventually these values will get updated. They only do it maybe like once a year or so, where they actually reevaluate the values of these properties, and then you'll be able to earn more, and they'll charge more for rent, et cetera, and you'll get more for the actual values. That's really great. Originally, I was only anticipating getting rent from these, not necessarily getting equity, even though you would assume you would get that. But they are proving that you will also get equity appreciation as well. So that's really, really great to see, and really shows why tokenized real estate can be such a great solution. Now, finally, for crypto, I've kind of consolidated a lot of what I've been doing down to a few things. I've taken the majority of my crypto off of exchanges like Binance. I wasn't super confident in the way that it was being done, and these are always changing so much in value. I wanted to just kind of, now that I've tested all these for like many, many months, I wanted to really consolidate into the places where I felt the most secure. I had the most control, and the cryptocurrency was the most stable, I guess, so to speak. So what I ended up going with was, I still want to continue testing lending, even though it's also not the most secure. But I'm happy to continue testing lending, because I also still want to do a full video report on all the different places that I've tested lending and how it works for you guys. So a lot of this stuff I'm doing for you. I would have actually probably pulled everything out and put it into Celsius, because it's the best for withdrawals, the least tedious when you're trying to withdraw, and they have the best interest rates right now. So it would actually make sense to pull everything and just send it all there. But because of the gas fees that would cost me, it's not super feasible to do that, because say it ends up costing me $5 in total to send everything over there. Given I have only made like several dollars from these platforms, it would seem kind of foolish to pull it all out and then just like lose all that value. Also, because these are stable coins, with the US money supply being inflated more than it's ever been in history, I don't know how useful stable coins are going to be going forward, and how reliable and sustainable they'll be going forward. So maybe I will just consolidate everything into Celsius in the near future. We'll see how that goes. I'll let you guys know though, for sure. I did consolidate some of these different stablecoins into just one stablecoin for BlockFi, just to simplify things. And for when I did want to withdraw, you can only withdraw one coin at a time per month to avoid paying massive fees. One stablecoin and one alt cryptocurrency, or cryptocurrency like Bitcoin or any of the other coins like Litecoin, Ethereum, etc. You can only withdraw once per month without paying a massive fee. And I think the fee was something like crazy, like to withdraw any Bitcoin, it was like $50. So you would have to have an insane amount of value for that to even be close to being worth it. I also had some DOT on Binance Savings, whereas these were just soft staked. And I tested that out a little bit. That was interesting. Right now, I want to continue testing that, so I'm doing it just with some DAI. And I sold out my DOT because I don't really have that much confidence in the project like I used to. It was more of a speculative buy, a lot of these were, but now I'm kind of really getting back to the fundamentals. I've consolidated most of my cryptocurrency back into Ethereum and Bitcoin. That's kind of why I did this originally. When Bitcoin dropped to 16,500, I sold all of these, bought Bitcoin, and now it's way, way up. So I made a lot on that. Ironically, probably more than I made from passive income from these coins. So I only want to focus on the ones that are paying really well, that I have a lot of confidence in, and then just keep my money in Bitcoin and Ethereum, because that is where I'm making the most gains. BitMax continues to be really good. I did take a little bit of these earnings after prices went back up, and then bought a little bit more BitMax, bought a little bit more Tron. I originally sold out because I sold almost everything, and then I bought back when the prices went up for Bitcoin and Ethereum, so I had more arbitrage from that happening to then buy more. And because I'm using Tron Link and Tron Scan and voting for super representatives, I've really tested out like where I can make the most money now. While when we take a look at the actual earnings, I wasn't maximizing and optimizing for the best possible earnings. So in the next month, hopefully you will see a big increase and you'll see how that works. But I've really optimized for the highest paying super representatives. So hopefully this will be growing at a faster rate, as well as on Hive. Something interesting with Hive is now that I've taken full advantage of the ecosystem, you can just leave your Hive powered up and get 3.4% APR. But instead, or rather on top of that, you can also lease out your Hive with delegations. Various entities will pay you a certain amount. But if you do it on D-lease, you can lease it to specific people for a certain amount of time and get a really good APR. A lot of them that I was doing was between like 10 to 14%. So that's paying me out about 1.6 Hive per day now, which is a lot. And then I'm still getting the appreciation of the 3.4% as well on top of that. So quite a bit of earnings will be coming my way from Hive. So a lot of these, I found ways to optimize much more and really increase the amount of earnings that I'm getting passively. And you can kind of see that here. All these I won't be reporting on going forward, but you can see my earnings from Bitmax, from Tron. This was for the last... This was just for the recent month. This isn't reporting on October, but I will show you that in my overall dividend tracking spreadsheet, which gives you an overview of everything. This is what I earned from lending platforms. And again, a lot of these going forward, I won't be reporting on at all, just focusing on these main ones that are earning me the most. And then this gives you a brief look at the entirety of my holdings to just give you a good visualization of that. And then lastly, we're going to take a look at my dividends tracking sheet, both for stocks and crypto. I've also been collecting my social earnings now and tracking that, which I shared in my report yesterday. But first, we'll take a look at my dividends. They've continued paying out pretty good. Unfortunately, November was just a month that it so happened where, like I was getting quarterly payout in October or whatever, and then I wasn't getting that in November. So it just so happened that November was a month where I was getting a lot less dividends. And, it's really just the average that you're worried about, because obviously there'll be certain stocks that only pay on certain times. And November just happened to be a month where I was getting paid out a lot less. But you've also got to consider that I did sell several of my dividend stocks to then buy into Tesla. Because again, as I mentioned, with the index fund ad, I'm so confident in it that I'm willing to kind of, take 2 steps back from what I'm normally doing and invest a little bit extra into Tesla. And I may even throw another $1,000 or two in the next week before this actually happens. Maybe even like a day before, just to really get that free 10% bump. And obviously it's not guaranteed, but with something like an index ad, no matter what, it's going to go up. It just really matters of what the price ends up being before it goes up. So that's the main thing to pay attention to. But I am very, very confident in this. Of course, none of this is financial advice, but this is absolutely what I'll be doing. And so that was my... and then obviously October was a really good month. It was actually my highest dividend paying month yet. So that was really great to see. And hopefully we get more of those. And as you can see, this is the progression of my dividends. The line here is the actual amount. And then the bars are the average and the future projected amount. If I continue investing the way that I have been. So it's really nice to see how that all plotted out and how things can continue going if I really keep up and keep on top of everything. And you can even see for yourself, like in the first few months when I first got started, I wasn't earning very much. But then as you continue, it really starts to get more and more and more. And then it's compounding interest and it really starts to add up. And seeing that going up every month or, generally increasing, because obviously, like I said, in November, there's months where it won't be as high. it really gives you that encouragement and motivation to keep investing, to keep pushing, to keep doing that. Because then you think like, okay, well, $70, that can pay my cell phone bill for the month. And you keep working off certain expenses until you get to a point where passive income can then pay for your entire lifestyle. If we look at my crypto income as well, I did okay in October and then starting to get a little bit more in November. This is a little lower than what I was getting before, but that's simply because I sold out a lot of those things and I put it all into Bitcoin and Ethereum. As I explained earlier, I sold out most of my Binance holdings, which was close to around $2,000 Canadian. So it definitely does make a dent on the dividends, but just really focusing on the best dividends going forward has definitely yielded me really good results. And it's only a little bit less than I was getting before. I mean, it's pretty close to these. So I'm not too worried. And because before I wasn't previously including my realty real estate income, I've included that here as well. So people can kind of track along with that. And yeah, with that being said, that's pretty much everything for this report. Let me know if there's something else you'd like to see or a certain graph or visualization you'd like to see for all this. Let me know if this helps you in any way, kind of going through my stocks and everything I'm doing. And let me know what you guys are doing. Also, right here, I forgot to mention is the graph of how my dividends are tracking for crypto. So just like the other one, the line is the actual amount and the bar graph here is the average and future projected income. So this way you can just kind of see a nice visualization of that. And I've linked all of these templates and explained very in depth as to how you can use them in my budgeting and investing video, which I will link in the description as well. I only posted it like a week or two ago. It's only like 5 or 6 episodes back. But with all that being said, that is everything for me for today. Let me know, what are you guys investing in? How are you earning passive income? What are your stock buys? What are your crypto buys? Is Tesla something that you're interested in getting into, whether speculatively or because of the index ad? And what are you guys doing for passive income and crypto? Let me know all that good stuff in the comments below. And as always, please do like, share, and subscribe. It definitely helps me out. And it definitely makes all this effort for tracking all this and collecting all this and doing all this and sharing all this information with you a lot easier. And the more I earn, the more I'm able to focus more time on this and eventually do this full time so that I can get you guys way more content every day, ideally. And I will continue to push to make more and more content over the rest of this month and hopefully even more next year. And as always, thanks for watching. Cheers.